everyone, welcome again. This is Christopher Aaron. This is the Wednesday broadcast from the iGold Advisor channel, and I'm taking a little bit of a detour today. As you can see, I have stepped away from the computer screen, I've stepped away from the desk, I've stepped away from the markets completely today. And the reason for that is I think sometimes it's very important to really reconnect with other parts of the world around us that are very important. For me, that happens to be getting out in nature. That's one of my favorite things to do. And I have my two dogs here. There's one, Schooner, and the other one is somewhere off on the other side of the river. I'm not sure if you can see him there. He's playing with a log in the background. He'll come soon. But we went for a hike today, and I just wanted to take this chance before we get to the charts to touch on a couple things. You know, I mean, it's so important to stay up to date on what's happening in the markets, especially if you're heavily invested in the precious metals sector. But I think there's so much more to it than that also. You know, one of the things that I like to differentiate myself between some of the other people who focus on the precious metals markets is just to say that I think it is quite possible for us to invest in precious metals and to also have an overall healthy outlook, a positive outlook on life and on what is happening in the world. And I know that it's hard to do that sometimes with everything that's going on with the corruption in the banking system and the elections and how crazy everything is with that. And trust me, I mean, I spent a year in the wars, both in Iraq and Afghanistan. I've seen it with my own eyes. There is certainly a lot of horror out there. However, that's not all that there is. And I think it is so important for us to take these opportunities sometimes to remind ourselves that you can be in these markets, you can be invested in precious metals, you can see the problems that are happening in our society, but at the same time, there is so much beauty around us and there's so much opportunity. Hi, Schooner. Well, I have to say that as an analyst, I come from a very different perspective. I think it is very possible for the precious metals to rise significantly over the next decade without the entire world collapsing. And for that matter, I hope that the entire world does not collapse, because that will not be a fun place to live in. So all I'm saying, guys, is I think it's really important to sometimes, you know, in your own way, really connect with the things that are important to you, that bring you the sense of peace and of fun and of beauty, because there is so much of that in the world. There's so much of that happening all around us, even in these little things in life, such as hanging out here, watching Klaus play with his stick, and where's Schooner? There he is. Bring that here. Come on. Bring it right over here. Very good. Very good. Come on. Come on. Bring it right here. So I hope that this somehow can just give a slightly different voice to what I perceive sometimes as the extremist rhetoric as far as the doom and gloom in this sector. And I think sometimes doom and gloom is very easy to sell to people because we have an innate, perhaps an evolutionary or developmental sense in us to want to focus on calamity when that happens, to protect us. But I just want to say that from my perspective, and part of the focus of this channel is going to be, going forward, the ways that we can thrive in the world at the same time as benefiting in the markets. And for that matter, if it turns out that the precious metals do something other than what we are expecting right now, I think that there is opportunity for all those people who at least keep their eyes open. There's infinite opportunity in this world, and I think we can tap into that, whether it's the precious metals or whether it's another market moving on. Right now, I think big things are in store for the metals over the next couple years. As soon as I get back home, we're gonna turn on the charts. Thank you. Ladies and gentlemen, hello. I, of course, want to welcome you back as we have made it back from the mountains and are now in the iGold Advisor studios. It is late in the evening on the 19th. So let's get up to date on what's actually happening in the metals. And it's always good when you come back from some time away from the markets and you remember that these elements that we were talking about are basically rocks as we were hiking on today and as the dogs were playing with in the stream. And we're talking about real elements here that are found naturally in nature. And so when we look at these prices, we always have to remember this. These are real assets that cannot go to zero. That's one of the unique things about commodities. Gold and silver have never gone to zero, and they never will go to zero. So there is something unique about these metals, whereas every fiat currency in the history of mankind has gone to zero. Of course, the US dollar has lost some 93% of its value since it was severed from the gold standard in 1913 by the founding of the Federal Reserve. Excuse me, it was not severed in 1913. It was devalued in 1933, but of course we know that they were printing money the entire time. Anyway, so as we are looking at the number of notes that are required to purchase 1 ounce of this element, I think it's important to keep in mind what we're really talking about here. We're talking about the confidence that the sum of buyers and sellers have in the value of those notes of paper. How likely is it that someone else will accept those notes of paper tomorrow? And we're seeing this reflected in the gold price, showing a little bit of strength over the last few days, coming back up to 1270 from the recent lows just below 1250. Nice to see some stabilization here in the gold price. Looking at silver, silver is really following gold right now. It is basically lagging gold. You could see that today. Some of the silver equities are catching a nice bid, so that's good to see. That tells me good things are likely coming for silver. However, right now the metal itself is just basically following gold. We have to say that. There will be times where it excels, where it leads gold, and there will be times like this where it follows gold. So let's put this into perspective. We're looking at the 1.5 year time frame now for gold. And here's the key. All the colors that I use pretty much stay the same if you are new to this system of charting. There's a lot going on in this chart, I know that, but everything here has a real representation of where significant buyers and sellers have been coming into this market over the last 18 months. For example, the low in December, this is a critical point. This was the low of the 5-year bear market. The most recent highs here, which as we have said, have been corresponding with this downtrend line, which we've showed many times, dating all the way back to 2011. And so it's very clear that there were technical based sellers showing up here all summer, basically still saying gold is in this downtrend, which they are correct about from the very long term. Of course, we have other data that we are looking at that is giving us hints for the possibility of this downtrend to break in the intermediate term future. It has not done so yet, but those hints are showing up across many different metrics that I study. So right now we are watching as gold came back into the 1250 region here, basically consolidating for the last 2.5 weeks. A couple of brief blips below 1250 and a failure to stay down there. So you could see the buyers showing up. Basically, the level that I had identified here several weeks ago at 1250 being the highest part of this support zone that I'm looking at, the 61.8% retracement level on the Fibonacci scale from the low to the high of 1378. So 61.8% of that comes right here at 1250. So we could see those buyers showing up there, And we also, of course, have some sellers here that were thinking this level was going to break. So you would see the brief blips down below that, sort of a panic down below that, and then buyers quickly stepping in. So the buyers are lurking in here. And if this pattern of higher lows and higher highs continues, we will be looking at another test of this downtrend line at some point in the next couple of months here. Of course, gold will need to break through the 1285 to 1305. This level that was acting as resistance, broke higher, acted as support, is now going to act as resistance again. So you're going to have some people that look to head for the exits when gold gets back into this level, and you're going to have other short sellers that show up here saying that, well, this level failed, so I'm going to short gold in this region here. So I would expect you're going to see gold come back into this 1285 to 1305 region over the next several days, perhaps a week or two, and then come back down. And then if it's ready, if gold is ready to break again above this and challenge the downtrend line, that will happen next. Of course, nothing changes about the medium-term perspective. Should gold fail in the resistance zone and come back even lower into the support zone, nothing would change at all about the medium-term perspective. It's just that that consolidation is taking an even more volatile form before the next attempt will come perhaps shortly after the new year at breaking this long-term downtrend. Now, once again, I do not sell gold or precious metals, and I am not a stockbroker. So from my perspective, I don't care whether people buy or sell. What I do is publish the exact research that I use for myself personally and that I was using for a number of individuals privately over the last number of years that I would share research with. But I'm not someone who is going to tell you if certain technical levels are violated. I'm not just going to keep showing up here and say, buy, buy, buy. If I think there could be a new low coming below the December 2015 low, I will say such. Just so you know where I'm coming from. Now, when we back this out, this is a new perspective that kind of dawned on me today. Maybe this was coming from some of the observations or the reflections out today in the mountains or where, who knows. But all of a sudden I was looking at this chart. I often just take the charts that I've been looking at for a long time, completely strip all of the annotations off of it and just start from a blank slate, see if I have any new perspective on what is happening to these markets. And it really dawned on me the almost perfectly symmetrical cup shape that this entire process here is taking, basically from 2013, and this could extend well into 2017, perhaps even early 2018 when you're talking about the upper regions of this cupping pattern here. Of course, the final portion of that took this form of this linear downtrend channel that was broken decisively right here where my mouse is in February. The price came back up, came back down. You can see that spike back down to 1200, retested that line. Keep those retests in mind if you follow this kind of analysis. They happen all the time. And now, anyway, it seems like we are forming this cupping pattern here. And this is basically what a long-term bottom should look like. A long-term bottom should not grind down like this, come all the way down to the low, and then shoot higher in 1 year. A long-term bottom should form this long cupping pattern. So I've said this at certain times in the past, but so far, even though some short-term uptrend lines have been violated here in gold, so far this entire bottoming pattern is looking very healthy from my perspective. Of course, we want to see, as I said, this low hold and for gold to make another attempt at that long-term downtrend line from the all-time high. You can't even see where that line begins. You've seen that in past videos. And we will be looking at the big break here in gold being something like this. Of course, even this move, breaking above the downtrend line, will most likely require a retest in and of itself. So keep in mind the psychology that individuals, perhaps you or some people who you know, have been feeling during this decline here. The sense of panic, or the sense that this doesn't make sense and the market's going to continue going down forever. Imagine if 6 months from now we get this breakout and you're talking about gold prices making a new high, and then from 1450 coming all the way back down to perhaps 1325 or 1300. It will be the exact same psychology here. I find it can be very helpful if you're really interested in doing this professionally or really developing your own skills. I find it can be very helpful to write down what you are feeling, both during the euphoric times and what the recent price action has been, and also during the declines and what the recent price action has been, because it can help shed some light on what may be happening in the markets at future troughs and peaks. I find this has been useful for myself in the past. So this looks like this is going to be shaping up here, this long-term, like 5-year cupping pattern here. And then we will, of course, be looking at this, the final resistance line from a horizontal standpoint, being this high right here back from 2013, somewhere in the 1450 region. So the entire bottoming process, this cup, will be taking place for about 5 years or so below the 1450 level. Do we see other examples of these long-term cupping patterns in other markets or in the gold market? Absolutely, we do. Take a look at gold from 1997 through 2002. Gold had come down from about 370, bottoming just below 255. And what did this shape take here? Even though this was a bit more jagged than the one that we're looking at, when we view this from the zoomed out perspective, you'll see quite clearly the similarities here. We're just talking about this series of lower highs and lower lows, lower highs, lower lows, lower highs, lower low, before boom, something changed here. This high was no longer being respected here in 1999, even though the price needed to come back and grind for another year and a half. Something had changed. These sellers were briefly taken out of the market. Now this spike here from 255 to 350 in 1999 was the Washington Accord, the Washington Agreement as it was called in 1999, which is basically just when many of the world's central banks came together, would you believe it, and actually said that we think gold should remain an important element to hold as part of the monetary system. Not officially, not backing the currency in any official amount, but they actually did say, this was in September of 99, that gold should remain an important element, an important monetary element in the financial system. Very vague, yes, but that's what caused this spike right here, basically marking the first of the double bottom of the lows from this 20-year bear market. This entire process took this very jagged cupping shape, and then you started to have the series of higher highs and higher lows. I think the correction that we are seeing right now is something kind of like this correction right here that really scares people and perhaps needs to go on for another few more months before the market gets ready to make a new high. And of course, when we zoom this out, this cut pattern, that was found right there. So these long-term cut patterns, when they form on bottoms, can be very powerful. You're really talking about a lot of metal that is getting transferred from weak hands into strong hands. So all this metal in these prices is getting taken out of the market, basically. And so then when the next group of buyers start coming in, they just have to start driving the price higher. And that's what we saw for the first major series of rounds of the bull market from 2001 to 2011. And I think that is now entering a second major phase here. That is the operating thesis that we are using here as a firm. Silver, as I said, is really just following gold at this point. It's kind of doing what it does some of the time, which is just to violate almost every technical form of analysis that we can give. And then so you have to start looking at other forms of analysis when the technical tools that have been working during the first 6 months or so of the rise start breaking. So you had this uptrend line decisively broken. You had this flag type of pattern that looked like it was forming a bull flag, just crashed down below that. Okay, so where does that leave us with silver? Well, we still have the series of higher highs forming here in silver and higher lows. That is a positive symbol for the continuation of a very early stage of a bull market here. You basically have silver coming back to this 50% Fibonacci retracement level of the entire move, so giving back 50% of those gains. And notice basically closing a couple of days within a couple cents of that line. You don't want to be so exact where you say if it's a couple cents lower that this is violated. So it looks like the 50% Fibonacci retracement has been acting as a magnet here for silver, holding it on these lows. There's so many forms of technical analysis, guys, and I've studied my fair share of them, and I've gravitated toward the ones that work well for me. If you'll notice, I've had a number of questions about this recently. What do you think about the moving averages, the 200-day moving average, the 50-day moving average? To be completely honest with you, I don't use them very regularly. I will pay attention to the 200-day moving average from a broad stroke perspective, but I don't keep it on the charts generally because there's too many false signals. And maybe in another video I will show exactly what I mean by that. But I have found from my work that the moving averages give too many false signals, too many times where an important moving average is just broken to the upside or the downside repeatedly, and it just fails to act as either proper support or resistance. I find the methods that I'm using here, trend lines, Fibonacci lines, I also dial into the candlesticks from time to time. Relative strength I find to be a very important indicator. And then another thing that I do not use all the time, but I usually keep it at the top of my charts, just so you can get to know this, is the RSI indicator. And so you kind of have to start looking at other forms of analysis when a market is violating a lot of technical levels. So here the RSI indicator, we're looking at a momentum indicator. And you are seeing that the momentum on the downside for silver is basically the most oversold that it has been since the December bottom, since immediately prior to the December bottoms here. So these RSI signals can lead the bottoms by a couple weeks or a month or so at a time. Keep that in mind. But the important point to remember here is that silver has fallen with such a high degree of momentum that this RSI indicator has registered an oversold condition for the first time since the absolute bottom at 1385. So that's how many investors here have been flushed out in a very short amount of time. It accounts for the rather abrupt shift in sentiment that we've seen
over the course of the last 3 or 4 weeks. This RSI indicator basically showing that in another form. Thank you very much for watching. The services that I do offer for anyone who's looking to dive into this more deeply, as I said, I cannot possibly include everything that I am capable of in these videos. The idea behind the premium research that is published on the iGold Advisor website was basically to just say, what are all the data points that are impacting my own investment decisions right now, and why don't I just put them down onto paper so that other people can benefit from those? I had a point a couple of years ago where I said, I was listening to a lot of the fundamental based investors who had been saying the same thing over and over and over again throughout the entire decline. And I said to myself, how could I possibly make any sense of these markets by just listening to the same rhetoric over and over? If I didn't have the charts that I was looking at, this would not make any sense to me whatsoever. And so I just had this theory that there must be some other people out there that appreciate seeing what is actually happening in the market day in and day out, as well as understanding the fundamentals. So that's what the premium service covers. It is published once a week with flash updates that come out when they're needed to basically update you on everything that is impacting my own actionable decisions in the precious metals market. The other service that I do offer for clients is individual consultations. This is basically for people that have unique situations and they really want to sit down, talk with someone either on the phone or on Skype. I have a lot of people who I've been working with who have very interesting situations that they're either just tuning into this market for the first time or they're considering making a really big purchase in the precious metals, and they just want an independent perspective from someone who does not sell the metals. So that is the point of that service. That is available on the website for anyone who wants. An early announcement. I am working on a book that should be due in 2017, and this is going to be a detailed overview and a point-by-point summary of how I go about evaluating the mining stocks. There are a lot of people who have started asking for something like this, especially for some of the other sectors, the other natural resource sectors. And here's one of the biggest hints. If you can learn to locate bottoms in the gold mining sector, you can learn to locate bottoms in any of the natural resource sectors. And this can be very powerful. So the point of this book is going to be for individuals who want to learn how to do this for themselves. I know that won't be everyone out there, and that's absolutely fine. Some people just like to have the action points and be guided in the right direction. Some people do really like to dive deep in to the meat of how to go about recognizing these patterns, how to go about looking at volume indicators that are showing when insiders are accumulating these stocks way before they start to have their big moves. That can be a very powerful situation when you start to invest at that time. So I'm looking at a 2017. I don't have an exact date yet, but I am looking at a 2017 release for that. And the point of that is to hopefully have something that can benefit people for years and years as just a one-time book that can be relevant going forward. So I thank you for being with us here and coming on this little hike with us, and we will certainly do our best to navigate this moment and all the moments that come that are just as valid and important as this one. Isn't that right, Klaus?